an hour and 10 minutes from US Open, and obviously it's the first day of the Jackson Hole Symposium, which many pundits have been worried is probably the wrong word, but expressing concern about how dovish or hawkish indeed Chair Powell will be at his keynote speech tomorrow. I think he should speak about 10 o'clock Eastern Standard Time tomorrow, or Eastern Time tomorrow, 1400 hours GMT. So far today, we've had some sort of quite odd sort of data, really. The chart I've got here, my first chart, let's get rid of me. My first chart we have here is the Australian dollar against the US dollar. It's been the strongest mover today. It's up over 1%. We rallied from this floor earlier in the week to around about 68.50. And we've gone all the way to within a smidge of 70.6990. So that's the biggest mover so far today. It's come off a bit in the last couple of hours, but 69.90 top for the Aussie today. Sterling, again, I've got some sort of surprising news from sterling. It was the consumer seems to. They say the Brits like shopping, and indeed the data at the CBI today showed that the CBI realised sales index came in at positive 37 when it was expected to fall to -8. So that was a big lift for sterling early. We've rallied over the 118 area yesterday, and we're over 118.50. We've come back to 118.25 at the moment, but sterling obviously remains pressured against the dollar, as do most currencies here. This is a big down leg to 117.50 here for sterling. Euro, where's the euro? Euro here. Again this morning, German IFO was more positive than expected. Remember, IFO is about the sentiment index, how the Germans businesses feel about expectations going forward. It came in 88.2, better than expected as well. So there's a bit of a mixed bag of data kicking around. So it's not all doom and gloom. Remember, the markets are now focused on the Fed, because the Fed leads everything. Obviously, this Jackson Hole meeting over the next 3 days may point to a direction. But generally, the Fed have tilted very aggressively towards the hawkish side. We've had these 75 basis point, concurrent 75 basis points hikes. So the issue is what happens next. We obviously haven't had a meeting or a rate hike in August, but the next one is the end of September. So it's still a way away, still 3 weeks plus away, and there's plenty of data to come in. The key data, or one of the key data points, will be tomorrow, the PCE data. Today's GDP data in 10 minutes or so, it will feed into that. It's a final reading, so not if it moves, shouldn't move too much. But again, we'll see when it actually comes out. Obviously, the weekly claims are ongoing, round about that 250,000 level. So still very, very positive, very tight jobs market, and that's given the centrists or the dubs on the Fed the argument that we can't go too aggressively. But really, the hawks have the upper hand. Bullard and Kashkari, who's sort of flipped completely from a very strong dove to a very strong hawk. They're looking for another 375 basis points at least before the end of the year. So that will, we've already gone 225 basis points. So it's, lots and lots of movement in the last 9 months since it started moving in March. So very much in focus. So euro currently trading, sorry, it's not euro. Euro .9970. So we had a go at parity early. It's come back down, and it's not. Sorry, let me just go up to the high time frame. A 4 hour here. There's parity here. This big blue line here. It's been crashing. Euro has been under pressure for a long time. Very little comment from the ECB. There was a late published thing from Miss Lagarde yesterday. But nothing really about monetary policy, significantly about monetary policy. And that, very much on focus. It's got this huge spike in the energy prices in Germany and across the zone for gas. It's going to be a very, very difficult winter and next winter as well, potentially. So lots of pressure on euro area. Many talking about already in recession. We've got this technical recession in the US as well, negative. PMI data early in the week as well. So euro can't get over parity. If we go to the daily chart, you see this is the first time there's parity here. So this is our fourth day now under parity. 1, 2, 3 days we've traded under parity, under one, and the pressure remains to the downside for the euro. This new summer lows 99.15. So pressure to the downside. Emma's asking about the Dow on the 4 hour. There seems to have been, we've had a shakeout. If I just take this up to this is the futures, Emma. Let me just check the time. Yeah, we've got 5 minutes before the data comes out. If I just go to the daily first, just bear with me a second. I'll come to your 4 hour in a minute. You can see we've had this this is the sort of summer recovery. If we let me zoom in. You can see that, we are. Is that back to the beginning of the so back to the beginning of the year. We've had these rallies in the stock markets. We had one here. We had one here. And then we had one earlier in the summer here. Obviously, there we go. Here at the end of May was the last one, up and down. But we've continued to push lower, haven't we? The lows have got lower, the highs have got lower, so we moved down. And that's what this looked like. This first rally here from the end of June to the middle of July. We poked over the 50-day moving average. We've done that earlier in the year as well. But we've continued to rally. We've rallied as far as the 200-day moving average here on the stock market, but then rolled over 4 days over, and then we've come down. We've come down quite aggressively. Remember, we always come down more aggressively. You can see there, good example there, than when we go up. So this has been a long extended run. That's one of its positives. It's been a much shallower angle of the rally than we've had earlier in the year. These previous three, so there's 4. However, it is during the summer and it is on low volume. So that's another caveat. We went under the 20-day moving average. Now we need to get back over the 20-day moving average. So going forward, Emma, and obviously, the daily 20-day moving average sits there at 33,168, and the 200-day now. This is up on the higher time frame. This is above the time frame that you're looking at. These are the areas to have a look at. It's at 33.67. Okay, so if we come down to your trading time frame, you can see there's that upper 200-day resistance, 33.67, and that's where we are now, right into this 33.168, and we sort of bounced off that now. So let's take it back there. So that's that 220-day moving average. We've ran into here on the 4 hour chart this morning, having sort of a bit of a rounding bottom there for this big trend down over the last couple of days. So we're into that. That's your first resistance, 33.168, which we've bounced off. But here on the 4 hour chart, we're back right into its 20 period moving average here, right on 33,000, 32,035. So that's support, that's resistance. Further resistance will be found there at 33,400, top of the Bollinger Band, and then the 50 period moving average on your 4 hour just comes under that 20-day moving average above it. So that's your next resistance, 33,537. So that's the range you're in at the moment. And then your next support, Emma, here on this 4 hour time frame is the bottom of the Bollinger Band now. So you see they're closing in the Bollinger Band at 32,750. And then this is the daily trend line and the 200. This is the 200 moving average for the 4 hour time frame down here around about the 32,500 level. So there's your support levels, there's your resistance levels on this chart as we're looking at it now. So the best of luck. I don't know how you're trading that, Emma, but certainly the best of luck. Ishmael, how can I earn money? You need a strategy, you need a system, you need to understand yourself, Ishmael. Come and watch our education page, have a look at our webinars, have a look at our videos. We're here to help, my friend. Adi, good evening. Hope you're well, staying safe. Best regards to all my friends in Indonesia. Michael, can you help us explain what happened to Euro Yen yesterday? There was an unexpected bullish move yesterday. What caused a lot of losses? That caused a lot of losses. Michael, it is what it is. Markets move. We can't. Quite often, it could have been some news. Happened yesterday. There was an unexpected bullish move. Unexpected. Presumably, you're talking about this candle. This is the Euro on 30-minute time frame. Let me just put the properties periods separate, so I know what we're talking about. So yesterday, you talked about this rally here. Yes, well, it was down, Michael, here. This is the 30 minute. I don't know what time frame you're trading it, Michael, but yes, let's go back. Let's default to the 1 hour. Yeah, that was yesterday. Yes, I mean, it was trending lower, but you've got to be careful. You can have big candles. So what caused this at 7 o'clock last night? I don't know if was there any particular news last night? Let me just go back that would have affected the euro. 5 o'clock yesterday, was it pending home sales? Yeah, it was pending home sales. They were better than expected at 5 o'clock. Obviously, it's US data. I mean, it might have been something else came out. It might have been some comments from Miss Lagarde, Miss Lagarde article. I don't know when that was issued, to be honest, Michael. But certainly that was it's a reason for having a tight stop loss. If you'd been short this on this one, yes, it would have really hurt. However, because you'd been going down here, interestingly, the high, look what's happened since, Michael. The high of that particular candle, which we're talking about, was way below the high from the previous day, from from Tuesday, which is around about there at 136.77. So we've since got to that level, and look where that level is now. It's now the 200-hour moving average, so it's become big resistance here. You can see here, Andrew's charts here. Those three key fractal highs. Then there was a spike to another fractal high. So it's itching. It was itching to go higher, but it couldn't get over that 200 hours. So it's just one of those things, Michael. I'm afraid. How's that? If we got to the higher time frame, is it affecting the daily? The daily time frame, still looks relatively weak. There's the down. There's the down trend line on the daily. We tested it earlier in the week. We haven't tested it this week, Thursday, Friday. Here we are, today, Thursday, Wednesday, Tuesday. So it's still biased to the downside. The 200 or the middle of the Bollinger Band is here. It is quite volatile, I'll give you that, Michael. But you can see we're still under the 20-day moving average. So it's still biased to the downside, which is where you were, presumably. Which is fine there, but then it had a rally up, but that rally's faded, hasn't it? So you've had a move up yesterday. Unfortunately, it sounds like it stopped you out. Just be careful. Big candles are significant, but it couldn't break it up. So since then, today, it's sort of started to move down again. So, today, look for those lows. So far, we had a low on Tuesday that was around about here. So 135.75. The low yesterday was 135.52. So is that going to get tested today? Well, at the moment, there's not a lot of drivers. It's negative, certainly on the 1 hour. There's the 1 hour, 200 hour. There's the 1 hour, 20 moving average, and there's the 50 moving average. So we're under them. They're unaligned. They're out of order. So that's not good. That's a bit messy from a trending point of view. So we should have the 200, then the 50, then the 20. We haven't. We've got the 200, the 20, then the 50. That's what this blue line is here. So we've moved down since this morning's high here on European Open. Didn't want to go any higher. It's moved down. That's would have gone short, and it's still sort of short now. And it went short, even short, if you like, around about lunchtime. And it's bouncing. It's retracing at the moment. But this needs to break back over this blue line and then back over the grey line if it's going to move higher. So that's still bias short intraday. I'm not saying that's where it's going, but it certainly for the rest of it, that looks biased to the downside. Michael, right, I've missed all that chatting and I've missed the data. So let me just go back to the euro on my 15-minute chart. See how it's reacted. So it's sort of not really moved. So the data's suggesting it's a bit in line with expectations. Let me have a look what the data is saying. So it doesn't actually come through yet. Why hasn't it come through? My terminal's not reloaded. I'm going to figure out a faster terminal. This is very slow. Right. GDP, worse than expected. Better than expected. Negative 0.6 of 1%. Claims better than expected. 243,000 as opposed to 250,000. Last week's was also reduced to 245,000 from 250,000. That's positive. And GDP price index, key number, is actually better than expected. So it's a strong set of US data. That should be dollar positive in the reaction. And indeed, here we are, euro sort of moving down here on the 15-minute time. It already tested the 200 period moving average here for 15-minute trades, but the data is not going to change that big move here we've had on the euro at 12.15. That's short on the 15-minute, 30-minute went short over this between 12.30 and 1. That's still short. It's under its 200 period. That's under its 50 period. Again, they're mixed up, but that's still moving down, and we're still pressured. So the rally to parity early this morning has been taken out, and we're moving lower. We're under the 20 period, and with the support on the 1 hour time frame is there at 99.65, where the 50 period is, and then the bottom of the Bollinger Band's there at .9951.5 for the euro. So just a quick reiteration, the US data is better than expected. It's across the claims and the GDP data as well. So that's quite positive. Ishmael, I'm very well, my friend. Hope you're well as well. Can we have a look at gold later, says Maxim. Obviously, everybody likes to trade gold. I'm saying everybody. Lots of you like to trade gold. It's had a good couple of days, gold. I'm sure Andrew mentioned it yesterday as well, from this sort of collection or this support down here at 1730. It's rallied through 17. This says 1742. It's 1745 is on my chart. I'm going to argue with Andrew. Dollars. A big candle here on Tuesday. Finished positively Tuesday. Some big candles yesterday. Finished positively again yesterday, and then a big breakout today, where the significant break today was this break of the red line here, which is the 200-hour moving average, and we're up and up and up, and we've topped out so far today. Fractal high sits around 1765. So a weaker dollar has helped gold rally, but we're coming back now, having had a move up in the last few hours, run out of steam, rolled over, and we're currently with half an hour still to go. The current 1 hour candle is looking quite negative. In fact, more negative than the up candle thus far. Obviously, it's not complete. We can't make a decision on it. But there was a suggestion, obviously, earlier on, as you can see here, if you're a 1 hour trader, running out of steam. See these high wicks? Rejection. So rejecting 1765 for 1, 2, 3, 4 hours. Very, hanging sort of shooting star type candles up here. And that's followed through in this hour as well. So some shorts get placed up here at above 1762, at 1764, 1765, and we're moving down currently. Immediate support is at 1757. Then we got the middle of the Bollinger Band at 1755.81, and then the 50 period sits here at 1755.91. And there's a big thick blue line there at 1753.75 for some reason. I don't know why, but that's in there as well. So there your support levels going down. But this is a big candle forming thus on this 1 hour. So Maxim, it's had a good run over the last few days. Currently, it's shaking out ahead of the cash open. As I say, that's driven. I would guess that's just happened as the data's come out. We've got it at the 5-minute candles. There we are. It's been moving down since before the data came out. But here, as the data came out, it's at 3:30. Here, this is the 5-minute chart for gold, guys. 5-minute chart for gold. It's moved negative, so it's strong dollar positive instant reaction to the data. Whether that'll hold and follow through, I don't know. But the red line here, the 200 period moving average on the 5-minute, getting tested at the moment. So gold is down in the short term on a stronger dollar on the better than expected US data releases. Say Ishmael, I'm very well, my friend. I'm very, very well. Michael, I hope that explained the euro yen story. Trade what you see. It's like with any strategy. You've got to, trade what you see, have a strategy, have an edge, and accept losing trades. Many people come into this business and are able to accept losing trades. So I'll come back to the charts in a minute. Just answering your question, Michael, from earlier, and we'll come to Jackson Hole in a minute. And that, it's just a part. Trading it's a huge psychological business. A lot of people sort of miss that. It's a mindset business. It's a mind game. You got to get yourself in the right mindset. You got to accept that you don't win all the time. In fact, you lose a lot more times than you would expect. Even as experienced traders would tell you that as well. It is, looking back. You do lose an awful lot of trades. The issue is keeping those losing trades small and letting you long trade, your winning trade and your short winning trade, pick all those pips up for you. So like this, let me just go back. This particular chart, this particular chart is a trend following trader, which is my bent. That's trended really, really nicely. It's been going up and up, it's broken out here, it's gone up, and now we're having a little bit of a turn down on this particular time frame. If we're up on the 4-hour time frame, it's still long. It's also having a bit of a shakeout, bit of a tweezer top forming there potentially, but we're stuck. We can't get over the 200 period at 1766, but we're supported by the 20 period. I don't know what that one is. The 5 period EMA as well there at 1756 on that 4-hour time frame. So it's all about the time frames that you trade. As far as Jackson Hole is concerned, Michael, it's quite often sort of discounted as just a big talking shop where all the bankers get together in the middle of the great wild open Wyoming plains. And it's not just the American central bankers, it's leaders of business. I read early in the week Philip Orr's definitely going to be there from the Central Bank of New Zealand, Reserve Bank of New Zealand. So there'll be others there as well. I'm not sure if Andrew Bailey's going to be there, but they will turn up at these events. The key, it's a 3-day talking shop. There's lots of stuff done. They're all relaxed. They're out of their suits. They've got their cowboy hats on. It's big cowboy land. It's the wide open plains of Wyoming. The press are obviously already there. CNBC have decamped there. CNBC are decamped there. Bloomberg TV are decamped there. It's on in the background here. They're back in the studio at the moment. But there can be some policy announcement. It was a major policy announcement last year from Chair Powell. But to be honest, that was unusual. Normally, it's just a lot of waffles. And coming from me, that's ripe, isn't it? But it's a lot of talking normally goes, not much policy. The key events as we move forward now, we're at the end of August. Lots of people are back from holidays in North America. They take their holidays earlier in the summer. They're back. The driving season is coming to an end. Schools are open. Universities are back in North America, especially in the United States. And so they have this event here out of New York, out of Washington. They all go for their final holiday break, if you like. This weekend is like also a holiday weekend in the UK. It's the August bank holiday, so Forex markets will be closed on Monday in London. Remember, the significance of that is that London is still the centre of the Forex market. So, sort of big talking shop. There can be some significant fundamentals. There might be some tweaking of their hawkish sentiment. There might be more hawkish sentiment. What's priced in at the moment, if we just go back to the charts, just go back to the euro, for instance. What's priced in at the moment? Get rid of me down. What's priced in at the moment, Michael, and everybody else for that matter, is that if we've got the daily time frame, is that the dollar's still strong. It's had a strong run. This is a euro on the daily. It's moved down really significantly here since this rally up at the beginning of August. Huge move down under parity, and that remains, the main driver. We got this massive energy crisis in Europe. We've obviously got the ongoing war in Ukraine, or the invasion by the Russians in Ukraine. It's 6 months old now, unfortunately. Tragic, terrible situation. But that's grinding on. It's had a massive impact on commodity prices, grain and oil and corn in particular. But they've bounced back a bit. Shipping costs, freight costs have come down a wee bit. So there is glimmers of hope. The peak inflation story is still very significant. So all of that is going to get churned around at Jackson Hole. So it's how markets, interpret those comments or non-comments from the characters that are all gathering there. So really, top of the shop, Michael, is Powell's speech tomorrow, 10 o'clock Eastern Standard Time. I think that's 2 o'clock, 1400 hours GMT. So watch that tomorrow afternoon. But let's say from a data point of view, really the PCE data tomorrow is probably the key piece of data. So that comes in also showing a bit of weakness like we've had with the previous CPI data and the RPI data. We've had some relatively positive. We've had a positive set of data today from the US. That's going to rekindle the idea that they've already been aggressive enough and they can slip back to 50 basis points. When I last looked at the CME Fed funds futures this morning, it was about 60% for a 50 basis point hike. This is the odds of it happening as far as the options market is concerned. 50 basis points was around 60%, and we're about 40% for 75 basis points. If there's more hawkish talk over the weekend, tomorrow and the weekend, that'll go up that the 50 basis points slip and we'll tilt more towards the 75 basis point. But at the moment, it's 60, 40, 50 basis points. And then probably what the market's pricing, another 50 basis points in November, and then cooling potentially if this inflation story continues, if the jobs numbers continue to hold up and the earnings and wages continues to hold up, slip into perhaps 25 basis points by December. Obviously not a move up in December. That's probably a bit too dovish. But anyway, that's where we sit at the moment. As far as the Jackson Hole whole conversation is concerned, and that's it. There's no more questions. What's happened? We dropped out. Have I bored you all stupid? There's nobody else. Yeah, let's have a quick refresh. So it's really all that in the mixing bowl, really. But dollar remains rather dominant, and our chart of the day, which was I started with, which was the Aussie, which has moved over 1% today, and the Kiwi against the dollar has come down quite significantly here in this current hour, which is just coming to an end. We've got 10 minutes to end. It's starting to break under this. Is this the 5 and the 9? I'm not sure what's actually this is showing us here, that particular moving average, but certainly it's certainly been supported by that all day, hasn't it? Nice old run, some profits being cashed in as we got to 69.90, and we're currently trading at 69.25, and Aussie traders out there. And it's all gone a bit quiet. So let's have a look. So Sterling remains in a big down trend. We went to 18.50 this morning, and we're back to 18.12 now as the US data has been assimilated. So Sterling has support here. We're right on where we are at the moment, 118.12. That's the 50-hour as well, that blue line. So it's quite a significant support level there. But you can see it's a big down candle forming for this hour. That's a crossover. That's likely to perhaps push lower, maybe not on an intraday basis. But next support was this area through here, that fractal low, around about 117.85. So the psychological 118 is obviously sits before there through here. So that's next support, and then we've got our intraday low. Our low yesterday was here at 17.45. Let me just put the period separate. It almost throws me out of time from that. So that's today. That's not today, is it? That was yesterday's low here, 17.54.7, which is was higher than Tuesday's low, so it's ticking higher. We couldn't get above. Where are we? We couldn't get above. Tuesday's high either. So Sterling also a bit stiff. Stephen, how can I identify main support and resistance? Thanks in advance. Well, go up to the. I don't know what time frame you're trading on, Stephen, but if it's not support and resistance, can be horizontal. I tend to use it horizontal, or a trend line, or whatever it is. The best way to do it, depending on the time frame that you're trading, but let's say you're an intraday trader, you're going to trade on the shorter time frames, you really need to know what's the daily doing, okay? So what's the daily doing? So here's my daily. This is the pound against the United States dollar. So this is the cable chart. So you tell me, Steve, what is this chart doing currently? Is it going up? Is it going down? Is it going sideways? On the daily time frame. It'll probably take too long to answer while you type it in or answer it. But hope you can see that's been in a big downtrend, hasn't it? From this rally up here at the middle of August, it's moved right down, some big strong days down, and then it's bumped, hasn't it? It's bumped lower. So, but remember, that's the chart we've just been looking at. That's that line I put on, didn't I, from earlier this week? So, really, your support now is that's a support line, isn't it? 17.54, because it was a low from yesterday, and it also corresponds to a low around about earlier in July. So it's a key low. But that trend is still down, although it's it started to go sideways over the last 4 days. These moving averages are still pushing down, so that's a support line. You're saying about support and resistance. So these are support areas. You'd want to break out of this level now here. But remember, we're now coming in. There's other things play again now. We're coming into the end of the month as well. That's in play on next Wednesday. So this little, at the moment, again, it's all about your time frames that you're trading. The time frames you trade. So 118 here is a key. It's a round psychological number. Round numbers are very, very key. Fives are also quite key. So it's 18, that's 1830. 18 itself, here, this line here on this particular chart. And then for 1850, 5 and zeros are also quite important. So here we've had a big downtrend. We're sort of cooling down at the bottom here. And we're trying to find a direction now. So, you could play your oscillators to trade that range, 1830 to 1750 is this range here for this one. So that, for me, this week, that's been my range. So that's my support and resistance areas this week. If you're trading on a different, let's go down, let's assume you're trading but be aware of the higher time frame. So if you're going to trade the 30-minute time frame, those lines we've put on here on the higher time frames will come into play. So if let's go down to the 30-minute time frame. So these channels here have been broken, haven't they? We went up and over. This became a bit of a support area, this 1830 level. We bounced off it, tested it again, then broken through it. So here, as a 30-minute trade, you've got that big support down here at 1805, the round 1800 time frame. But you've also got quite a significant support here at the bottom of the Bollinger Band, the 50-hour moving average and the 200 period moving average. So I'm saying now, but for this particular time frame. So that's a support area, and that's a support area. So that's how to, identify. That's what I would say, Stephen. But it's all dependent on the time frame that you're trading. The higher the time frame, the more the significant the support and resistance is. So, you might want to put blue dotted lines here for the daily resistance, those daily lines here. These are the blue dotted lines. And then when you drill down to your, 30-minute time frames, you might want to put a different color on. So these are for our 30-minute trading time. This is a big support area, but it's not a daily, so we need to make it a different color or something. So that's the way I do it. But certainly, I start at the daily time frame. I will eyeball a chart and see anything I can see clear. So here up at let's go to the daily time frame. So here, this remains in a big downtrend for me. It's been consolidating this week. We've had a lot of pips available and taken off the table for August. We've broken to new lows for the summer. June's low, this is June, remember, this is the daily. So June's low was there, July's low was there, and we've pushed for a new low in August. So the lows are still getting lower. So that's all pressure to the downside. So that's what I'd be looking at. Here, on an end of day basis, the resistance is a long way away. The resistance, the 20-day moving average and the 50-day moving average are all the way up there at 120.40, and that's above a huge psychological level for cable historically, which is 120. So that's the way to do it, Stephen. If you can't see them, they don't exist, is the other thing I'd say. Okay? That would be a resistance support line. That would be a resistance line now, that's a sloping one. But that's how to do it, basically. Use either indicators or just use your eyeball. Okay, right. There's lots of comments over on Facebook. Now, Guangan's asking about euro, pound, and pound kiwi. So let's crack on. Michael, I'll come back to the pound yen in a minute, as these guys have been hanging around for a while by looks of things. So euro, pound. I mean, it's been a choppy day. We've had some mixed euros and euro. Where's my euro chart? The euro, is it here? No, I can't see it. I'll bring it in. Let me just drag it in. Can you hear Andrea whispering at me? She's saying hide something. And you can see something. Ah, that's all right. Right, euro, pound here on the. Let me just go back to the 1 hour chart. We'd rallied to 84 earlier, 84.50 earlier. We had some good German data this morning. We had some good UK data, surprising. IFO was better than expected. GDP, German GDP was better than expected. And CBI data for the UK was better. So euro sort of rallied up this morning. It's come back down. So this is the euro pound on a 1 hour time frame. I don't know what time frame you're trading, but let's look at the chart. Okay, that must be a. Hang on, I'm not sure where that. Yeah, so this is a down channel. This from where's this? This is from the middle of June. So it's been moving down, zigzagging down, top of the channel, through the midline, bottom of the channel, off the bottom of the channel, over the midline. So you get the point. So we're zigzagging down. We're moving lower. Pressure's lower. So we're in the channel still. We've just gone to the top. We're moving back down. And we ran right into support, the mid 20-day moving average, the midline on the Bollinger Band on the daily time frame. The MACD histogram's under the zero line, signal line trying to move up from these lows here at the beginning of August. So it has been sort of sliding up, but the bias is still to the downside. So that's the daily. We come down to the 4 hour, pounced out the top of the channel and come down, and we're up. Tested it again this morning, and we're moving back down again. Let me just put the period setters on. Period set. There we go. That was last. This is this week, isn't it? 22nd. So we're still angling down. So we went today. We come down to the daily time. Down to the hourly time frame. We ran to our channel top earlier today. We ran to that 84.50. And we've moved down. Here on the 1 hour time frame, we're under the 200 hour moving average. We're in the under half of the Bollinger Band, and we're moving down. We've also slipped under the 50 moving average. That's negative here. The 50's crossed the 200. So we're priced or pressured to the downside. Next support from yesterday's low took us all the way to 84.07. So 84 is coming into play again. So we currently trade at 84.35. We need to move back over that 50-hour moving average, which is where we are now, 84.35. Then we've got resistance at 84.45, and then the 20 midline on the Bollinger Band sits at 84.47. So lots of fresh air down here. So there could be it's more perhaps pressure. Run to that, finds resistance, and then perhaps moves back down here. MACD's rolling over here on the 1 hour time frame, just holding. Stochastic still moving down at ATR. So Wagenga euro pound sort of buys the downside that on those daily 4 hour and 1 hour time frames. 80.8450 was rejected. 84 is the big line in the sand, 50 pips lower, but we currently trade at 84.35. The other one you asked for was pound kiwi, which again I'm pretty sure is not on here, but lots of people are attracted to pound kiwi just because of the amount of pips it moves. But be careful. The spreads can be much wider than some of the other assets. And anyway, let's find it. That's not that one. Let me find it. Aussie yen. I won't override that. Let me override the VIX. What we're looking for is pound. It was pound kiwi. No, it's not there. Can't find it. Let's put this in pound and New Zealand. Sorry, this is a different setup. It's a black chart. Sorry about that. Let's zoom this up. So we've gone to a black background. This is the pound New Zealand on the daily time frame. So you see again another one that's sort of biasing lower. We're in the there's the we can see this now. The white charts. We went to white charts. This pound New Zealand. 191.50 is where the 220-day moving average sits. Here, I also want to show you that. Is it? Of course. There we go. here. That's in blue now. I'll leave that on. There we go. So it would sort of rallied up from the low here, mid. Oh, also changed the colours of those swaps. Bear with me a second. Sorry, I've changed background. I shouldn't have done that. Let's make it red. Okay, let's make it red. Okay. So that's our low for August, 187.79, so 187.80. And our 20-day resistance sits at 191.45. Okay. Since then, we've moved back down. So here we've been under the 20-day in the second half of the Bollinger Band. We're under these two key moving averages as well, the 5 and the 9. So this is lower 180. What's that? 189.75. So again, that's moving lower. So again, there's a lot of fresh air down here to this 187.80 zone. And again, Kwang, I don't know what time frame you're trading on, but that's the daily. We go down to the 4 hour. That's gone sideways, but there's our daily resistance. You see, we've moved down, and we, again, new lows. We're trending lower from last week. The lows have got lower, the highs have got lower. So we've moved down, had quite a significant 2 hours move to the downside. Here on the 1 hour time frame, again, there's a lot of fresh air, isn't there? A lot of black space. As we rallied up here last week from the 12th of August from this low at this 187.80 zone, we rallied up quite nicely. We've gone side, we rallied up, ran out of steam, and it's gone sideways. A bit conditioned, but we're breaking out. See how the Bollinger Bands are sort of edging lower. We've squeezed in, then moved low. We squeezed in, we're widening, but we've moved to the downside. So the pressure is down to here. The pressure is to go this way. To move back up here on the 1 hour time frame, we need to break 190.45, which would be quite a significant move from where we've gone to today, but not insignificant either. So 190.45 is resistance to the upside. This is putting in a new fractal low here, I would guess, if this is up and down. So that's also pressure to the downside on an intraday basis. Now, I can't see your questions, unfortunately, on Facebook, but come on YouTube and we can have another look if you like. Imran, also on Facebook, is asking about gold. We looked at gold earlier, and it's, as I say, this is gold on a 4 hour time frame. So a nice rally from this 1730 level here. This is the 4 hour time frame. Big candle here on the 23rd earlier this week to the upside, breaking into the upper half of the Bollinger Band for the first time since all the way back here on the 18th of the 15th of December. So it's been a big downtrend, big up candle, consolidation. We moved higher. We've also moved over the 50 period moving average. So resistance is 117.66 for 4 hour trades. That's the 200 period movement. That's the 200 period moving average. And support is the 50 period there at 1756 currently. And the midline of the Bollinger Band is all the way down there at 1746. Coming down the time frames, Imran, we can say this is the hour time frame. Nice strong candle this morning over the 200 hour moving average, up to a high of 1765 today. Two fractal highs up there, but again, running out of steam like I did. Hopefully you were still here when I did this before. Running out of steam, some big, wicks for 4 hours. Couldn't get any more buyers up here at above 1765. Shorts were starting to get played. The rally was coming to an end. Some, closed of this rally that might have gone in earlier in the week, and let alone today, rolled over, and it's looked to roll over in the last hour. New hours started, and we've closed actually up here at 1760. So it was quite a good close to the hour. So the 200 hour moving average sits down there at 1757, which has been tested with this in the last hour, but closed way above it. But it still looks like that's rolling over for the day. Remember, we've had on the back of strong US data. So let me just recap the US data from half an hour or so ago. Claims came in better than expected at 243,000 compared to 250,000. Last week's were also revised lower by 5,000 to 245,000. And ongoing claims, continuing claims came in at 1.415 million, also better than last week and better than expected. The GDP number wasn't as bad as expected. It was expected to be a contraction of 0.8 of 1%. Last time it was 0.9 of 1%, actually came in at 0.6 of 1%. It's contraction, but it's better than expected. The final reading of Q2. So we're still in technical recession, but it's perhaps not as bad, but it's still negative. It's still contraction. Another positive piece of data was the GDP price index, which came in at a positive 9%, much better than expected at 8.7%, and a tick up from last time at 8.9%. So overall, that data dump half an hour ago from the United States was positive for the economy. It's been dollar positive, as you can see here with the gold market rolling over. If we just go back, if you go to the 5 minutes, see how gold reacted as the data came out at 15:30 here. So a big spike. Gold went as low as 1756.87. Somebody's eating a sweetie just out of my earshot, and I can hear it being unwrapped, and it sounds very, very nice. So, gold unwinding on a stronger dollar today. Imran. And finally, the final question I've got here is Michael asking about pound yen. Another one that moves a lot of pips. Like we just looked at the pound Kiwi. Pound yen moves around a lot. Spreads can be a bit wider than the other crosses, but there's lots of pips on offer, but you've got to be careful. It's known as the Widowmaker, and it's known as the Widowmaker for good reason. It can move very aggressively. So pound yen ran out here on the 30-minute time frame. I've got the 1 hour time frame. It's run out of steam here, so it's rallied to the 200 period here. Let me just put the. You can see it's sort of angling lower, isn't it? Where's my properties? There we go. Put that period separator. There we go. So Michael, we've ran to the 200 period here on the 22nd. The 23rd, we did the same thing. And here on the 25th, we've done exactly the same thing. What's happened? We've reversed every time we've hit it 3 times. So it's pretty clear. We've gone up to 162. I tried to get to 162 today. In fact, we've probably got over 162, haven't we? There we go. I've changed object list. Change the colour because I had a black background. Let's go back to mark blue. Okay. So, just about 162. There we go. I don't know that. I didn't know that, but there we go. 162 this morning. Another big round number. Didn't like it. We're over the 200 hour. We didn't like it. We didn't like it on Tuesday. We didn't like it on Monday, and we've come back down. We reversed quite aggressively the following hour, but we didn't break the 20-hour moving average. Stop moving. The Bollinger Bands is going horizontal. The moving averages are flattening. That's not a trend moving market, but you can see there's big volatile moves. So be very, very, as I say, always be careful with the pound yen. Big move down here at the 10 o'clock candle, and we've broken lower since then. So the move up was rejected at 162. We've moved down, and we currently trade at 161.50. Having been as low as a day low this morning at 161.30. So we bounced off that a wee bit. Going forward from here, Michael, which is obviously what you're more than interested in. It's not what's happened, it's what could happen next. Well, it's sort of juggling sideways, isn't it? It's juggling. It's a funny word, isn't it? But, biased, again, as a trend follower, that's lower, isn't it? The highs are getting lower, and the lows are getting lower. Admittedly, yesterday's and Tuesday's was the low of the week. 160.85 is the low we'd need to break today, tomorrow to take it lower. But 160.80 is the support level from yesterday and Tuesday. But our resistance is definitely this 200 hour, isn't it? We were over a bit more early in the week, but that's now, as it's compressing, you can see we've got this falling wedge style. We've got this slower highs. We're compressing, and our resistance is that top today at 162, but certainly going forward for the rest of the week, and probably the rest of the month, to be honest, certainly today and tomorrow, 161.85. So we've got a little 15-minute window there, 15-pip window to 162, but that's looking a bit flaky, to be honest. So it's biased to the downside. 160.85 is the low of the week. Will it get tested today and tomorrow? Who knows? But that's still biased to the downside. What else is anything? Well, MACD's not telling me very much, to be honest. It's not wavering much from the zero line. We've got a wavy signal line. The histogram bars are not, significantly up or significantly down, but we are again biased to the negative. We've had a bit of a smidge of positive here on it today, but I wouldn't be surprised if we start to move down again into close today and tomorrow as we move into the end of the week. This is the pound yen on the 1 hour time frame, Lydia. I don't know what we're looking at, Lydia, or what you're interested in, my friend. But Lydia, any particular asset you want to have a look at? Stock, commodity? We've had a massive move on. Anybody trade coffee? We've had a huge move in the coffee futures this week, last couple of days. Copper's had a big move. But this is pound yen, as Michael's asked about pound yen. So it's biased to the downside here in the 1 hour time frame. Daily is also biased to the downside. There's not too many lines on it now, isn't it? But this is the daily. So there's the end of day trade for pound yen, and it's been under its 20-day moving average since this big down day here on the 28th of July. So it's been a negative August, really, you'd argue, wouldn't you? And there we are. There's an even lower low for August, which I missed out there, 159.42, which is just about going to, by the time August is out, by Wednesday, that 200-day moving average will be around about that 159.50 area. So that's a big support area. But, it's been under that all of August, been under the 20-day moving average. There's the blue line, which is the 50-day moving average, which is not even flatter, but also. So we've moved down quite significantly. The Bollinger Band's expanded, then we've contracted, and we've really been going sideways for a lot of August as well. Low volumes, remember, lots of people on holiday, especially in the UK, especially in Japan. Things get back to normal first week of September. First week of September is key this year, because the US Labor Day is on the 5th, the first Monday of September. It's a variable holiday, the US Labor Day, but that's really the day that marks everything getting back to normal. Things like volumes tick up after that day. Everybody's really back at work, certainly in North America, after Labor Day in the US. And universities are open, schools are open. And volumes pick up. Everybody's back in their trading floors. The banks are open again, and that's key. And then we go into September. And that's why September and October can be particularly volatile months as we go forward. But pound yen bias lower daily. 4 hour. Here's the 4 hour, Michael. And intraday today, we've had a rally to 162. Like we did earlier in the week, to the 200-hour moving average. Rejected it each time. We did it exactly the same today. So hopefully you were short on this, Michael. I don't know if you're still here, but let me know. It's down under the 20 period, under the 50 period, and we're currently trading 161.43 with yesterday's low way down here at 160.85. And as you saw, that August low was my market. I can't remember. It was under 160, wasn't it? So a fair bit below there as well. So that's it. There's no more questions. Where are we? Let's have a look. We'll keep going for the next 15 minutes anyway till the US market opens. But it's let's go back to some of the dollar crosses. See if the dollar's held on to its gains from the data 45 minutes ago. Dollar CAD. There we go. Dollar CAD's up. This is the dollar CAD on the 30-minute. So again, being pressured, the dollar. Oil markets had moved up, supporting the Canadian, obviously supporting the Canadian dollar. We went to the key 129. There's 129. There's a big round number there for dollar CAD. Numbers. There's it's 128.95, but you get my point. 129. Find support at the round number, and it's bounced off. And here on the 1 hour time frame, there's that positive start for dollar for the dollar again after that positive US data. Dollar CAD resistance. Anybody trading it comes in at the top of the Bollinger Band, which happens to coincide with a 50-hour moving average. So that makes it more significant. Sorry, this is 30-minute, not hour chart. But anyway, that's a 30-minute traders. 129.52.7. And then your next level up would be 129.87. But that's trending high. That's broke into the upper half of the Bollinger Band following the US data. And dollar CAD is off its knees, off its support at 129. There we go. Let's go back to my chart of the day, which is the Aussie. Let's see if it's continued to cool. Indeed, it has. So this is our chart of the day, up over 1 and a bit %. The Australian dollar, we went to .6990 from these levels down here at 68.50 earlier in the week, and breaking .69, breaking this daily trend line, this big blue line here. This week, come back and playing around with it. 4 hour is still positive. There we go. Bit of a tweezer top form there on that 4 hour chart. So maybe some movement down and a rollover for the Australian dollar. Euro. Waiting for Friday now. Yeah, tested that 50-hour moving average now, haven't breached the 220-hour. So again, rejecting parity at 1, and we're trade at 99.65 currently. Dollar yen bouncing between 137 and 136. We trade at 136.75. But again, another one that's sort of biased to the upside this time with a stronger dollar. These are very high levels for dollar yen historically, 136.70, but a bit of sideways action recently. I don't tend to do that today. It's a 1 hour time frame. 137, 136 down here, and we've sort of just over halfway at 136.70. So there we go. No more questions. I am gonna wrap it up and watch the US Open today. See how the stocks open. We had some big moves yesterday. Any stock traders? Revlon caught my eye. Nordstrom, bad earnings. The upmarket retailer, 20% Nordstrom fell yesterday. Revlon was down 11%. Peloton, again, a mem stock, been incredibly volatile. Lost an awful lot of value, but rallied, bounced 20% yesterday as they announced they'll be selling their bikes and services in the US, only in the US at the moment, via Amazon. And Bed Bath & Beyond, or Bed Bath & Beyond, another very, very volatile stock over the last few months, up 18% yesterday. S&P was up 12 points yesterday at 41.40. In fact, let's just finish with the equity markets, because we've had a nice, this is the daily time frame, guys. We've had a nice recovery, as I was saying earlier when I was showing Emma the Dow. On a 4 hour time frame, but we've rallied here to this 200 period moving average, daily moving average, rejected it, and we've been down for 4 consecutive days, and we bounced a bit yesterday. So we were up, it was only 12 points, but we were off the 41 level as we tested the 4,000 levels, the next level below that, and the 4175 level is a key resistance level here. From the beginning of June, end of July, and support here back in March. So it's a key pivot area here, 4175. And we're back to about that now, aren't we, on the intraday time frame? So we've got an update yesterday, positive start currently today. Here, there's that 4175. Let's move it just for correctness. There we are. Again, unsurprisingly, we ran to it, couldn't hold it, and we're back down. So that's a key resistance moving forward. If you're trading this today, we got that 4175 is absolutely key. The Bollinger Band today sits at 4182, and the 200 period sits all the way up there at 4225. Support is the 20-hour moving average at 4156.54, and the 50-hour moving average at 4142 going forward. But that's so far a positive session to close yesterday, and it's been a positive session for US equity markets today on some positive US data, positive, surprising holding up German data this morning, and relatively positive UK resilient retail data as well. So there we go. There's no more questions. I'm going to wrap this and go and watch the US Open. Take care, everyone. Stay safe. Join us next week for our webinars and our live sessions. We're here to help. Any final questions before I go? I'll have a quick sip of water and then I'll switch you all off. Let you go. No? Okay. Well, take care, everyone. Stay safe. Have a great weekend. Friday, PCE data. Mr. Powell, key speech tomorrow. So watch that. We could have some volatility into the end of the week. And obviously, the end of the month comes on Wednesday next week as well. So take care, stay safe, and we'll see you all again next time. All the best. Bye-bye.